Since beginning of this year, we see lots of buyers fighting each other in order to buy properties. Everyone thinks property value is going up. As we know, in long term, property value always go up. But why only few people can retire earlier based on property investment? So today, we are very lucky to invite Richard again to come to our channel to share this topic. Welcome to Someplace channel. Today we invite Richard to come to our channel again to talk about why only few people can really retire early to achieve financial freedom by doing property investment. Even we know property investment is a great thing and everyone can do it, but only few people can really achieve their financial goal by doing property investment. What's the reason, Richard?
So I'll share starting with sharing the fact, the data. From ATO, only less than 91% of Australians don't have investment property. So only less than 10% of Australian residents has an investment property. And for people successfully build a property portfolio, it's even lesser. If you have a property portfolio of 3 or more, you are in less of 1% of the population. The very common challenge we found, most people can go by themselves to buy an investment property with 1 or 2. Once they go for the third one, it's going to be very challenging. A few very realistic reasons. One is, well, after you purchase 2 investment properties, normally your cash flow is very limited. You have to be a very high income earner, or your property is a very, very good positive cash flow into you're able to go a bit further. Otherwise, most people will start with 1 or 2 investment properties. That's one common reason. And another thing is, it's not, to a lot of people, it's not necessary to build a property portfolio. Some of my clients, when I first met them, when they're buying their first home, for example, or when they're buying their first investment property, I normally try to map out their goal and to map out a plan. But some feedback has been, why do I need an investment portfolio? If I don't need an investment portfolio, I'm not driven to build a property portfolio. It might not be necessary for a lot of people. So it's first of all.
So they don't have the motivation, to do that.
So first of all, it is hard. In fact, it's hard to build a portfolio. Second of all, not everyone is really keen or motivated to build a property portfolio.
Okay. As you mentioned here, like once they buy 1 or 2 properties, their financial become harder to buy next properties. And so I know like you have helped lots of people build up their property portfolio. So how they did, to be able to buy the third property, fourth property? What's the difference? Like, what magic did you do to help them, make them to have their borrowing capacity?
To be honest, if you want to build a successful property portfolio, one thing, the most important thing is to keep increasing your income. And second of all, it will be really, really helpful if you have a really clear goal and a clear plan at the beginning. The most crucial thing, like I said, is when you're buying the first and the second one, you choose the good cash flow property. So you're focusing on the cash flow.
What do you mean cash flow? You mean the rent or?
Yes. So if we treat an investment property as a business, the income of your business is your rental income. Then you have all your expenses, like the interest if you borrow money from the bank, the insurance. If you buy a strata title property, you gotta pay the body corporate, then the city council rate. All the expenses related to this property is the expense. So if you use your income to deduct your expense, it's a positive number. We normally call this a positive geared property. If it's a negative number, we call it a negative geared property. So, but sometimes you can have a negative geared property, but positive cash flow. This is probably another topic. We're not going to expand it today. In regards to cash flow, if you have a very strong cash flow property, it's going to help you down the track to keep buying the
Okay.
building.
So basically, you are talking about to buy the property with good rent, so it become positive cash flow, and people will think, if it's positive geared, then we have to pay tax. But as what Richard mentioned just now, people can use depreciation to make it become negative geared on paper, but realistically it's positive geared. So we don't need to pay anything from our pocket, but on paper it's a loss because of depreciation. By doing this, it can increase our cash flow and increase our borrowing capacity. Yeah. Okay.
What I've seen actually, most people at the early stage of the investment journey, we not tends to think that long down the track, and we have seen a lot of Australians. Normally, this is the Australian dream. I buy a home to live in, and I'll pay back my home as soon as possible. I don't want to have a debt. I have that sense of security. After probably paid off this home, I can then upgrade it to a bigger one. But selling this property instead of keeping the original home. So what we have seen is lack of the motivation for a lot of people, or lack of the driver. Why do I need to build up this portfolio?
So with the people you help, how they have the motivation, why they need to buy multiple properties? What's the reason for them to do that?
From the data from the government. So currently, we living in Australia, we are very lucky. We have a very good superannuation and pension system. So if you are in some developing countries, you are not as lucky as Australia. But even that, most people in Australia at the time of the retirement, they won't have enough super to support. For example, like from last year's figure, the average male super payout when they retire is $350,000. The average payout for a female is $280,000, because normally a female takes some time off when they are pregnant, so take maternity leave to look after the children. They are working less time than a male, and people are having that amount of superannuation is the people normally have earned a median income, which is roughly $80,000 per year for an individual in Brisbane right now, roughly $110,000 for a family. It means before retirement, they are having a lifestyle of $100,000 per year. But if you keep this lifestyle, you only have combined maybe $500,000 superannuation. So it's going to run out very quickly. So a lot of people, when they retire, they have to lower their living standard or change their lifestyle a little bit, unless they have built a very good equity to have a passive income to support their lifestyle. And I have friends working in the nursing homes. Some stories she's told me it's very sad. If you don't have enough passive income or asset to support, you could end up with a very awkward retirement life or situation.
Yeah, I totally agree with you. I think even it's not just about retirement. Like people nowadays, they work. It's not everyone enjoy what they are doing. It's basically they do the work for living because they don't have options. If they have the passive income, they probably would do something they are more interested, something they have strong passion. So it gives people options to do things. Even like for ourselves, like my background is engineer. The reason I can change my career from engineer to real estate purely because I got the passive income from my rental properties. Otherwise, I don't have the courage to change my career because I have family I have to support. But because of passive income I built up in the past, it gives me the options to do the things. And also what I hear like from Warren Buffett said, if we don't have the way to make money while we are sleeping. That means we have to keep working until the last breath of our life. That means we have to keep working because no work, that means no ongoing income, or even we get income from government, but it drops the quality of the life standard, like what you mentioned. So people has to keep working all the time until as long as they are alive. So that's how important to have the passive income, to have some income while we are sleeping, instead of spend our time, keep working to make money.
Exactly, I agree. It's funny you mentioned most people don't really enjoy their work. A friend of mine, she's working in a public listed company. They're doing transportations and that sort of business. She's middle level management, and for the middle tier management, they have an external training for the whole middle management team every year, at least once a year. And during 1 year's training, the trainer actually asked them a question: if money is not an issue, what sort of job would you like to do, or what things would you like to do? So they shared, I think she mentioned to me, it's 10 or 15 people in that room. They share one by one. Nobody has said the current job is their ideal job. They all want to do something different. Yeah, it's really good to have that option, that financial security, when you want to maybe take a break, when you want to do something you enjoy. You have that security to support you, have the options. I think everyone will enjoy the option.
Yeah. I think another reason, why even property investment is so good, but not really many people can achieve their financial goal based on property investment. The reason because lots of people is looking for quick money. So what does it mean is, when the market is good, everyone want to buy properties. Everyone jump into the market. They compete with each other. They put high price, to secure their property. And some people, in order to buy the property, even they don't really like. For example, some property last year, no one would like to purchase. But this year, everyone try to get, because there's not much left, not many options. So people in that position to buy the properties, and it's not as good, when the people doing it last year. But last year, people scared. So lots of people thought, if I buy the property next month or the month after, if the value drops, I should wait. So everyone look at short term, and we know in long term, the value always go up. But people always want to make quick money. And when the market is not doing well, people scared. They try to sell the property, so they don't hold the property, because we know the market changes. Every 10 years or 12 years. It has a time like now. It has a time maybe even better, and it has a time tough. And people during the tough time, if they don't have the knowledge, if they don't have people who can support them, they tend to give up when everyone says the market is not good, the property value is going to drop, and people scared, and they probably just give up. Or some people, they buy the property without good cash flow. If they lose jobs, they can't hold the properties, they have to sell. So all these factors, it cause many people, even they know property investment is good, but they can't achieve their financial goals. So we need to have like what Richard said, we need to have a plan, strategy, how to build up long-term things, not just buying one property. The property, no matter how good it is, if we just buy one, in future, if it's your own occupied home, you can't sell. And if you sell it, you buy another one, other property value also goes up. It's not just yours. And also because when we buy, we pay stamp duty. When we sell, we pay capital gain tax. Lots of transaction fees involved. So the best way, and of course it depends on each person, situation is different. But for myself, it's buying multi-properties, holding for long term. And this way, I build up my passive income. And to do that, I need to have the property, less maintenance, good rental income, low vacancy rate. So I wouldn't, just purely look for something, with great capital growth potential. Of course, everyone looking for that. But sometimes we know if the capital gain potential is very huge, and the cash flow probably is not that good. And that way, if something happens, people will give up. So that's why we need to balance this. You know, we need to have something with good cash flow and something with good capital gain potential to combine them to have the portfolio to help us to hold for long period of time.
And also, like Junyi said, it's very important to have a strategy, but it's no one single strategy will be suitable for everyone. This is what we've seen very common common mistake people make as well, is to very easily take advice from your friends or family. Those people are really your close, the closest people. They want you to be living better, but sometimes their strategy might not be suitable for you. For example, I'll take some very extreme examples. Like we have doctor clients, their income is very strong. It could be $500,000 annual income. Then their strategy might be going for a very strong capital gain potential portfolio rather than focusing on the cash flow. They can support and they can afford to have a few negative cash flow property just driven for the cash flow. But if you are not in that situation, that strategy might not be suitable for you. For example, a client of mine, he's a handyman. So his strategy is to buy really rundown properties. Same with some builders as well. There'll be some very rundown properties. They can do some capital work to increase the value of the property themselves. So some people take that strategy. But if you're a really busy professional, for example, you're like the doctor I mentioned, that wouldn't be his strategy. He's very busy. He doesn't have time to do the work physically in his property. So those two people would definitely have two different strategies for them. It's whatever is suitable for you. Seeking the good professional advice would be the best.
Okay. It makes sense. Thank you for sharing today, Richard.
Thanks for
inviting. We hope today's sharing will be helpful for you. And if you feel like this is helpful, please register our channel. Okay. We see you next time.
See you next time.
Bye.